And we're live. Hey, it's Chris and Lee here, and we are here to talk about the state of the current mortgages, because that's what we are. That's what we do. So, Chris, take it away.
Okay, so right now we are talking to people across the country, from California to Florida, New York to Oregon, all over the country in the Midwest, and the common denominator is that people are making $50,000 a year each, okay, which is a respectable income, but they want to buy houses. And the problem with that is $50,000 house, according to our numbers right now, gets you only between $160,000 to $245,000 house. So call it $200,000.
How much debt? How much debt on that one?
So in that scenario, zero. That's if you have zero debt, no car payments, no credit card payments. You can get about a $200,000 house if you make $50,000 a year. But the houses in these areas, whether it be in Florida or California or New York, the houses are expensive. They're going for $400,000, $500,000, $600,000. So to get there,
So $60,000 buys me how much again?
$60,000 gets you a $245,000 house,
And that's
no
with zero debt. Zero debt.
No debt.
How many people that you pull credit on actually didn't have debt? How many?
Zero.
Everybody has debt, right? Everybody has a credit card, a car payment, something like that. But then that's zero debt, because we wanted to have the number with zero debt. So Chris built this awesome chart, and then with average, moderate debt, because we pull credit all the time. We know who's got what kind of debt they have. So keep going with that 60,000.
So here's the average that blew my mind. So the average car payment is $716 a month. Average, whether you're making $20,000 a year or $200,000 a year, the average car payment is $700 a month, which is insane, because when I was growing up, it was $100, $200 a month, depending on the car that you got. So with a $700 car payment, and with only $300 a month in
Go to
debt.
our account and see what we look like here, because we're kind of new at this live thing. We're figuring out the live. We want to teach people, but we're doing it on live. So we're trying to figure it out. We got some tech people here working with us. Sorry, keep going, Chris.
So with $300 in debt, credit card debt, personal loans, and a $700 car payment, if you make $50,000 a year, or call it $60,000 a year, you can only buy a $190,000 house. So that's the problem. That's the problem that we're facing across the country. That's the problem that you guys are going through. If you've spoken to us, we've given you the numbers. We've told you how much you can afford. And many times it works, but a lot of times it does not. So we have to come up with a way to get those numbers up, to get you into a house that makes sense for you, for the amount of bedrooms, the lot size, all that stuff. We just need to get that income up. And how do we do that?
Well, with a $60,000 a year buys you how much house again?
$190 with a $700 car payment.
With a $700 car. Now, if you have a car payment, how much?
$190.
Okay, so if you have a car payment, how much?
$190.
All right, good. Without a car payment?
$245.
$245. So if you don't have okay, perfect. That's what I was looking for. So if you don't have any debt, but who has no debt and is ready to buy a house? Nobody. So $60,000 buys you how much? Let's go to $80,000. How much does $80,000 buy you no debt?
$330,000.
$330,000. That's more realistic. There are some houses. California, very hard to find. Florida, Texas, kind of hard to find. Some places in Texas, but $330,000.
But that's not the national average.
Okay,
so that's not the average. This is talking about a higher income person. Regardless of where they live, this is not the income that we typically deal with. If we were dealing with $80,000 a year buyers, a couple, that's $160,000. If you're making that kind of income, you can get pretty much whatever you want. We're talking about the individual that only makes $50,000 a year.
Or $80,000 a year, because, hey, that happens. Yeah.
Do you guys make $80,000 a year?
Well,
and if you do, you need to call us because you need a house.
Yeah. Well, we pull credit on people, and very often it's $60,000, and then the spouse makes $50,000. One way or the other, about $110,000, $120,000. But there's debt. You got to have car payments. You got to have. There's credit card. There's student loans. People think you can just ignore student loans. You can't. There's a formula for student loans. If you're going for conventional, there's a formula. If you're going for FHA, there's a formula. If you're going VA, there's a formula. There's a formula for all versions of student loans. How many people do we have on there now?
5.
Whopping 5. Yes, we got 5. You're our first 5 people on the
Do
line.
you guys have questions?
Congratulations. You guys are blowing it up. Talk to me. What are the questions? Well, you have to read to me.
Okay. What if you're in a house with a contract?
What if you're in a house with a contract? What is that? What do you get from that question?
I think they're renting and they're in a lease.
So if you're in a lease and you want to, so there's a couple of ways. One, if you're in a big apartment complex and you buy a house, we've seen it where they'll work with you if they can rent it. Usually it's because there's ascending rental rates and they can get more rent. In a different type of market where it's descending, then they don't work with you so much. They kind of hold you because when they rent it out, they lose money. But if it's an ascending, which right now most markets in the country are ascending rates.
So here's the situation when it comes to renting. The landlord just wants this thing rented. Doesn't matter who's in there, it just has to be a good renter. So I've actually had a situation where the landlord said, hey, if you could just find me a replacement for you, you can break your lease.
Next question. We got a whopping 5.
We got a whopping 5.
killing
We're
it.
doing good.
We're killing it right here with 5. We got 5. You guys are special to us.
I think we're at 0.
Special. We're at 0? I don't know. She says we got 5. She's actually watching on the other phone. So what? Give me another question. What do we got? What do we got?
Oh.
We can't go dead like this. Never go dead space. Chris, talk it.
Okay, so when you're buying a house, the biggest question that I get is, what credit score do I need? What credit score do I need? So when you're buying a house, 580 minimum. Minimum. The better, the higher the better.
Can I do 500?
For a lot of different reasons.
Can I do 500?
Yes, you can.
Everybody
actually.
says that right away. As soon as you
can.
say 580,
If you're
I
a
heard you could do-
veteran
I heard
of the
you could do-
United States.
I heard you could do 500.
If you're a veteran of the United States, or here's a good one. If you have a big down payment.
So if you got a lot of money, things work?
Yeah.
Hey, wait a minute. If you have a lot, so get this. This is breaking news. Nobody's heard it anywhere other than right here. If you have a lot of money, it helps you in life, right? So can I do 500 FICO? If not, what do I go?
So if you don't have good credit, fix your credit. We have a place for you to fix your credit. It's actually in our link. What is it called?
Stand store,
Yeah.
stand.store. The rest of it's at our top link.
Go to the link,
Yeah.
join the credit repair, get
Yeah.
your credit fixed, and it doesn't matter at that point once you have your credit fixed. But if you have a 500 FICO score, yes, you need to come in with a lot of money. Yes, you need to have a good income. Or be a veteran because you could do a VA loan down to 500.
VA loan down to 500. Actually, VA pop quiz. What's the minimum FICO score for VA? Anybody? Nobody came up with it. What is it?
500.
No, 0. VA is a residual-driven loan. It is not a FICO-driven loan. I agree that 500 is probably the lowest we're going to get, but if you look at the guidelines say the VA is a residual-driven loan. What's a residual?
He's the loan officer, and he's asking you guys what a residual is.
No, I'm asking
Can you believe this
You're
guy?
the loan
Can
officer
you
too.
believe this
What's
guy?
the residual? What is-
Residual means the money that's left over after you paid all your bills. And they all actually factor in other things like the expenses of the household, not just your debt.
Why?
Because at the end of the day, they want to see that you can live comfortably, that you're not going to be house poor, that you can buy food, that you can pay for your electricity bills. So that's why. The
Well-
VA goes an extra step for the vets.
You got any questions for us? And we still have a whopping 5 people. Thank you, all 5 of you, for being here. Don't go nowhere. There's a super prize at the end. It's not really a prize,
My
but
favorite 5.
My favorite 5. These are my favorite. The Fast and the Furious 5. Go. What's the question?
Can I apply for a home loan to see what I need to prepare?
Yes. Can I? Ooh, good question. Whoever that is, you get a cookie. Come on to the office. We got cookies in the office. They're a little stale, but we'll still give it to you. No worries. Can they?
Write this down. 909-841-3058. Call that number. I'll see
That's
it when
his
it comes
social
in.
security number.
I
That's
will
his
walk
social-
away. Lee will.
That's his
Sing
social
and
security
dance.
number. And then
It's 10 digits.
Yeah, it's that's just yeah. Anyway, can you apply while you're trying to find out? In fact, that's the only way you should do it. You should have a licensed loan officer pull your credit. Don't think freecreditreport.com, lowermybills.com. Any of these places are going to give you an accurate credit reading because there's different verticals in the credit world. One of the verticals is automobiles. That's a vertical. They look at a different algorithm set. Another vertical is credit cards. That's a vertical. They look at an algorithm set. And the third one is mortgages. It's different. It's way different. But once we pull your credit, it won't cost you a dime. Once we pull your credit, we will actually know what your real credit score is. We'll tell you. We'll even give you a copy if you want. So then, if it's low, we'll tell you how to fix it. And a lot of times people think, oh, I have low credit, and I pull it, and you have low credit for credit cards, but you have high credit for mortgages. You run into that?
All the time.
So what should they do next?
Okay, so make sure you have 2 years of employment, okay? So if you've worked at a job, let's say Subway for a year, and now you're working at Target for a year, that's 2 years. Let's say you've been at Target for 3 years, that's 2 years.
Stop
Let's
by.
say you went from Target to Amazon, that's 2 years. So regardless of how you chop it up, as long as you have 2 years worth of history, we can work with that. He touched on the credit. The third one is assets. Okay, assets. How much do I need to put down? How much do I need to put down? Depending on where you live, depending on what you qualify for, potentially zero.
So what are you talking about? USDA loan, right? USDA loan.
That's
What
one
you're thinking
option.
about?
That's one way to
what
go.
about Calhafa?
That's another way to go.
Shadap?
That's another way to go.
Sapphire?
There you go.
Platinum?
Keep adding them.
Shinoa?
Keep them coming.
These are all down payment assistance programs except for the USDA. USDA is an actual loan program that if you live in a rural area, you can get in for zero down. How do I find out if I'm in a rural area? How do you find out?
You go to USDA.gov.
Yep, and then they'll
Look at
give
the
you
map.
they'll actually give you a map and show you where. If you're in that rural area that's trying to grow, the USDA will actually give you they'll let you get in for zero down. It's a whole different program. But the other ones we mentioned, Shadap, Platinum, Calhafa, some of them are expired, by the way. I'm just running them off the top of my head. Right now, we probably use which one the most? Probably Calhafa. Probably use Calhafa the most. They light up, they go away. They light up, they go away. Every single state has these. They light up, they go away. So we check to see if you are qualified. Now, is this the absolute best way to go zero down, or I'm sorry, down payment assistance program? What do you think?
Is down payment the best way to go?
Yes.
Not always. If you
Okay.
have the money, use it. If you have the money, use it. Now, I don't say use all your money, but I'm saying that if you can go with the down payment out of your pocket and afford it and have extra money left over, that's the route I recommend, and here's why.
Our amazing engineer says we have a question. What's the question?
Uh-oh.
It is, are there certain negative items you can omit from an application?
Ah, what a genius question. From now on, if somebody questions, just raise your hand, just say the new question. So go ahead. Are there negative items you can omit from a question? Yes! I'll answer it. Okay, cool. Hey, so here's the thing. There, we can universally just dismiss healthcare collections. If there's a healthcare collection and it's health related, then we can just say, hey, no. How about charge-offs? If it's actually been charged off and we look at the credit report, it's been charged off, we can prove it's been charged off, gone. It's already factored into your credit score. So there's a lot of things though that pop up that you may not have known were out there. Like for instance, child support. Some people don't know that there's a back-end system for child support. Federal debt. So that stuff happens. We can find federal debt sometimes. If you owe money to the courts, sometimes that shows up. There's so many different things that show up, but there are certain things that if you have a healthcare collection, we just go, okay, we don't look at that. We just don't look at it. And then the other things out there, it's case by case. Some versions of student loans, some versions we're able to ignore. Most of them we have to factor, but there are a few scenarios where we can ignore student loans. We have another question? Talk to me.
Can I refinance at any bank I want?
Absolutely. You absolutely can. Here's what it is, guys. This is the truth of it. When you choose a loan officer, you're choosing the person, okay? The bank is a bank is a bank is a bank. They're all going to ask you for W-2s. They're all going to pull your credit. They're all going to be wearing stuffy shirts and ties. So it's always going to be that. The truth is you got to work with people that you enjoy. You got to work with people that are giving you the data that you're looking for. You got to work with the people that are actually helping you get to that next step. And that's what we do. We actually build relationships with our borrowers. Some of them become friends. Some of them invite us to their birthday parties and their weddings and their kids' quinceañeras and all that other stuff going on. So,
but here's one of the secrets. One of the big secrets. We all get our money from the same spot. We get it from VA, we get it from FHA, we get it from Fannie Mae and Freddie Mac and the USDA. There are occasionally what's called a proprietary or just my bank has this certain program that does exist from time to time, and you can only get that at that bank. But most banks resell their loans. They use Fannie Mae guidelines, Freddie Mac guidelines, VA guidelines, FHA guidelines, and then that's when it gets a little complicated. There's a difference between a broker and a direct lender, someone who's FHA direct, Fannie Mae direct, Freddie Mac direct. All this gets complicated. You don't have to learn this stuff. Just trust us. We'll figure it out from there. Vet us. Find out if we know what we're doing. You got another question? Talk to me.
Can I get a loan if I took a big loan for school?
Go.
okay, so you're talking about a student loan. So student loans do factor in the debt. Now there's multiple different ways that the student loan could be sitting. It could be you could be making your regular payment. You could be doing an income-driven payment back. You could be in collections. You could be deferred. So there's a lot of different ways that your student loan could be showing at the moment, and we can work with All of them.
But
Now,
if it's showing zero, what do we do if it's showing zero, Chris? Because that happens a lot.
so there's a lot of different reasons of why it's showing zero, and that's what I'm saying. So it could be in collection, it could be in deferment, it could be you could be paying it back and it's just not reporting. So it's a very complicated thing to look at, but don't let that stop you. Allow us to take a look at it and determine what it's going to do to your buying power, and it may work. You might be able to buy a house now.
Our engineer extraordinaire says another question. Go.
Are you recommending people to go with a 3-to-1 or 5-to-1 adjustable rate mortgage with the high rates now?
That's a good question.
Beautiful
Holy
question.
smokes.
He's the guy to ask.
I just got hit. Oh, wow. Okay, so here is the tough part of this is the economy. This is a bigger question than just a simple question. Here's why. Because at the beginning of this year, the Fed funds rate was anticipated to be at 4.6% at the end of 2024. Now, the Fed funds rate is what the government lends to the banks, and that gives the interest rate for largely the credit cards. Your mortgage is based off the 10-year bond. But the 10-year bond does have to compete in that arena, so there's a rough connection to all of that. What that means, they've just adjusted it from 4.6% at the end of 24 to 5.1%. What that means is money's going to be more expensive for the next year, according to the Federal Reserve, the people that actually give out the money. Which means you're going to have a longer time. So if you did a 3-1 arm and you thought 3 years from now the interest rates are going to go down and you're going to be able to lock in, well, things aren't looking like that anymore. Things are looking like interest rates are going to stay kind of high. Now, in order to get that 3-1 arm, they price it in. They got really powerful mathematicians. They've got, what do you call those guys who do all the numbers?
Bean counters.
Bean counters. They got amazing bean counters to figure out whether or not this is priced in, because the banks they're not about losing money. They want to make the money, and they know that you're going to refinance. They know if you have a 7.5% mortgage right now, when things go down to 5 or 4, that 7.5 is just gone. And the way that we know that is we have something called concessions. When the bank wants you to buy something, they give you a concession. They drop it down and they give you little money. They give you extra money. But if they know that this isn't going to make me money because 2 years from now this is going to go away, they get rid of the concessions because they know you don't have a choice. It's not, by the way, it's not Chris and I. We don't get to do it. And it's not your loan officers out there. They don't get to do it. We all run off the same. We pull pricing. We have to follow Freddie Mac, Fannie Mae, VA, FHA. We have to follow their guidelines. There's no question. Everybody has to follow their guidelines. You got another question for me, engineer?
One more.
Talk to me.
With what loan can I buy a prefabricated home?
Chris, talk.
So manufactured homes are very common. They're actually becoming more popular because of the price of houses across the country. So what was the question?
With what loan?
With what loan can I buy a
So you can use
prefabricated
pretty
home?
much any loan in our arsenal that's traditional finance.
Wait a minute. Any loan?
Yeah.
Tell me.
FHA, VA, USDA, or conventional, which
You
is
can
Fannie
use
Freddie.
all those?
You can use any one of them.
Okay.
Now, which one is best? That depends on your file, depends on what your credit is, depends on how much you're coming in with the down payment, all that stuff, but it can be done.
But my loan officer told me you couldn't do it. How come?
Because your loan officer is no good. You need to call Chris Lee.
And there's some guidelines to it. The guidelines are it has to be post 1979, right? 76.
June 76.
June of 76. Post 76, I knew that, I was just testing it.
I know.
June of 76, it has to be a double wide. It
It doesn't have to be double wide anymore.
No?
Nope.
Oh.
You can get your singles if you want.
No kidding.
Yeah.
See, that's why I
Yeah.
keep them around. We need it for that. Used to be double wide. Now you can do single wide. And here's the most important part. It has to be affixed to a permanent foundation through the proper method. In California, it's an engineering cert. There's a few things that you have to do and it has to get certified. But it has to be real estate. It can't throw wheels on it and it goes somewhere else. It has to be real estate, and it has to be affixed to a permanent foundation. And at that point, you fall within the guidelines. There is a different pricing structure. It's not the same as a stick-built house. The pricing structure is different. We actually have to price it different. So, hope we answered your question. Hey, remember, you can call us anytime. Google us. We're all over the place. You can find us. Do we have another question, Amazing Engineer? Talk to me.
Do you guys have a no ratio loan?
Do we have a no ratio loan?
Okay, so what you're talking about is non-traditional financing, okay? Chris and Lee work with everyone. So what that means is if you need a no ratio loan, yes, we have it. If you need a no VO or VOE only loan, yes, we have it. If you need a bank statement loan, yes, we have it. Aside from the traditional financing, we have the arsenal to fit everyone's need.
So what we call those is Alt QM mortgages. That's kind of the category they sit in. Alt QM, because QM is a qualified mortgage. That's somebody that fits the guidelines of Fannie Mae, Freddie Mac, VA, FHA, USDA, and maybe one or two others. But the other ones that do not fit that category. In other words, hey, listen, I put a lot of money in my bank, but I don't want nobody to see my income, and I don't want them to see anything else, but I make a lot of money right there. So if I do that, I can do something called a bank statement program. And I just need to show the last 12 months, sometimes 24 months, of bank statements, and then I run this formula, and then I'm able to submit your loan based off of bank statements. So that's a program out there. Engineer, tell me what we got.
We got, when buying a house, how do I rate buy downs work when I'm making an offer? Does that make sense?
That didn't make very much sense, but let me try on it.
Okay, try it. Give it.
So when you're putting in an offer, it doesn't matter what you're spending. It doesn't matter what your closing costs are unless you're asking for that back. So when it comes to your loan structure, it means nothing to the seller. It means nothing. Everything to the seller is how much money they're going to make. So they always want highest and best offer. So as far as your closing costs are concerned, it has nothing to do with the seller.
So if we're talking about the points to buy down the rate, that's also kind of filtered in that question. So in everybody's pricing, every loan officer, we get this big grid. And right now the grid would probably go from 6 to about 9. So the 6% to 9%. And it sounds like, hey, I'll take the 6%. Yes, you will. If you're willing to pay $75,000 and you qualify, because there's certain type of loans where you can go 6% of the purchase price is the max you can do to buy down. Some 3% is the max you can do to buy down. So these are different ways to factor it in. So there's what's called par rate. Par is no cost, no benefit. That's kind of the going rate for all loan officers, par rate. There's a little bit of difference inside of that, but that's your par rate. And then if you want to get money back from the lender, you can actually go above par and get $3,000 or $5,000 back. So that can happen if you're talking about discount points. Yes, they factor in, and sometimes a loan officer will drop the interest rate in order to qualify you on a debt-to-income ratio. Hope we answered your question. If we didn't, ask a different way and we'll answer it.
Or call us.
Engineer, talk to me.
We got, I'm looking to buy a home and I am a first-time home buyer and I don't have any money to put down. My credit score is 640.
Right at the line.
Yeah,
Right at the
we'll
line.
take that.
Yeah,
640.
sure.
Hey, props. 640 is the start. Let's do this. Talk to him.
So you're at the line for down payment assistance. Okay, down payment assistance starts at about 620, but 640 starts unlocking most of the programs. So you may qualify for something like that. A down payment assistance program. Here's what it does. Let's just say that your down payment is $20,000. What the down payment assistant does is it actually gives you another loan that you're not going to be making a payment on, and that's the $20,000 down payment. Okay. Now there's different ways that these get paid back. One of them is a grant, which means that after a certain amount of time, it's forgiven. The other one is paid back at the end of the term.
Wait, forgiven?
Forgiven.
Gone?
Gone.
Just gone? How many people do we have right now?
Oh, we have 13.
We have 13. You're the lucky 13. Oh my God. We're here to help you guys. We're here to help you get a house. What question do they have? Wonderful engineer. What do we got?
Last one was credit score is 640. That was pretty good though.
Yeah, that's a pretty good question right there. 640. Now, the magic numbers in credit are 580 because that opens up for FHA, but it doesn't open up for conventional. Conventional opens at 620. At 620, what is that? Invite to join live.
Let's see what happens.
Accept that real quick.
Where is it?
It's right here. We're new at this. Okay, good. Boom. Accept. Boom. We're new at this thing. I don't know what that just meant, but I think we're live with somebody. Hey, welcome to our live. We're trying to teach people how to buy houses in this unbelievably tough environment because the Fed funds rate is high. Interest rates are somewhere in the 7.5%, all the way up to 8%. Our engineer has another question. Talk to me.
What states are you licensed in?
Oh, good question. Chris?
All states except for Hawaii and New York.
Every
48.
state, yeah, we can help you in every state except Hawaii and New York. A lot of reasons for that. We don't like to get into them, but everything but Hawaii and New York. Engineer, what have we got?
A 600 score with 8,000 down in New Mexico. What can they get?
A 600 score with 8,000 down. Okay, so there's a couple of things that we have to think about here. First of all is debt to income ratio. I do not know your income and I do not know your debts. So I can go just a base off of your 8,000 down and I'm going to guess about $260,000 because that's an FHA 3.5%. That's just math off the top of my head. Because if hair,
Could be your hair.
It could be my hair. So if off the top of my head, because if you had 10,500, you could buy 3,000. If you have 8,000, it's going to be about 260,000, somewhere in that range. And that's because of the 3.5% down. But that's not offered alone, obviously. We have to find out what your income is. We have to find out what your debts are. And we have to figure out what your debt-to-income ratio is. Engineer, go ahead.
Can I purchase an investment property in the Midwest living in California?
Good question. I'll take that.
You can buy an investment property anywhere.
Anywhere.
Here's what you need: the down payment. The down payment's the biggest struggle when it comes to investment property, and the thing right behind that is reserves. So when you buy an investment property, it usually asks for a minimum of 15% down, sometimes 10, but a minimum of 15% down, and then you need to have at least 6 months reserves on your primary residence. So let's say that's $1,000 a month, so you need $6,000 for that. And let's say your investment property is another $1,000 a month, so you need $6,000 for that. So you need $12,000 that's sitting aside that you're not using to buy the house to do the transaction.
Dude,
but you can do it anywhere. You can buy it anywhere.
We have this client right now who has 7 investment properties. We're going through, and she makes a boatload of money, like a boatload of money, and has a lot of money in the bank. And she says, hey, I want to buy another $400,000 property. So guess what? $400,000 in investment property, 20% down, not super hard math. It's just $80,000. I need $80,000 down. So for most people, that's a showstopper, but for this person, it's not. So she says, cool, I got the $80,000. I got more than that. I probably got $90,000 to $100,000. I said, cool, that satisfies the down payment. Then, when we put the 7 properties in, we have to have PITI for every property for 6 months minimum, sometimes 12 months, sometimes even more, but 6 months minimum, which turned it into, you need about $160,000 for the next investment property. Engineer, what do we got?
Someone said, what about double wide trailers?
Ooh, double wide trailer. There was a good country song with that.
Those are nice ones.
Yeah.
Those are nice ones.
Yeah, nice
Yes! Yes, but like Lee said earlier, has to be affixed to the earth via a permanent foundation. Means anchored to the earth. You're not dragging it away with a truck. Was there another one?
Yeah.
Yes, there is.
Talk to me.
As a 19-year-old with no work history but a 740 credit score, what would you recommend?
Dude, first, respect.
740 for a
740, 19-year-old?
Good job.
Amazing. Whatever you're doing, keep doing it. You're playing the game right. So what would we recommend for this person? Well, you need income. Because if you got that 740, there's somebody who's requesting to go live, except it just went away. So I don't know how you...
Probably an accident. I think people are accidentally hitting
Is
that.
it? I don't know.
Yeah,
well, if you wanted to go live, great. Come and join us. We don't know what this is. If you've followed our TikTok account, we've been putting out videos and advice for years now, for years, and we are just learning live. So work with us. We're working with us. Go ahead, engineer. What do we got?
70K a year,
70K.
4,000 in debt.
4,000 in debt.
Been at my job for 1 year. I
1
got
year.
denied from 21st century.
21st century. Okay, so we got somebody trying to go live
Try that
again.
one, try that one.
Just accept them. And I don't know if maybe they should. Dude, check
wow,
this
wow,
out.
side by side.
Oh, dude, we're side by side. Okay, so 740 in income, only 1 year at the job. So the question is, what's your work history? If you've only got 1 year, that's fine as long as you've got a 2-year work history, but we do need a 2-year work history. Because we need to know that you've been working for a while. Now, if you worked at somewhere else and it's roughly the same industry, then no worries. If it's exactly the same industry, let's say you were a IT tech for this company for a year, then you came to this company for a year, you're an IT tech for that company, perfect. That's perfect. We need the 2-year history. Now, there's some catches to that. Let's just say you went to college to become a nurse. We've done a lot of nurses loans, a lot of them. And they go through and they get all this college and everything, and then they get a good job that's paying $80,000 a year. Nurses get paid very well. So then, can we use the time in school? Yes, she can buy a house right now. Go ahead, engineer, what do we got?
85K income on 630 credit, no debt. Do I qualify for a 340K house?
Go.
Yes.
We got a chart. I mean, we do this so often that we need a real quick chart on what we can do. And rates are high. You got another person trying to join?
Let's do it.
Accept it. Accept it. Nope,
Nope.
they're gone. So when I'll just tell you accept, and you just go straight to it.
Some
Okay.
people spend a minute.
We're new at this. Yeah, we're new at this, guys. So we're answering your questions. We have the knowledge, but we're not TikTok geniuses yet. Working on it. Working on it. Next question.
I don't have work history, but I've been looking for a DSCR loans, but I don't know much.
So that's a very popular way to try and get investment properties right now. And what you're talking about is debt servicing. So basically the money that the property is already bringing in. which is a beautiful idea, fantastic thought that a lot of people have. But the truth is, if you're looking for investment properties, you know who else is? Companies that are actually doing this for a living. There are business out there that look for the properties.
Join. Accept. We're trying to get.
Hey, hi, what's up? Who are you? Who are you? You can't hear me. Thank you. Anyway, so the DSCR is trying to get to an investment property. It's a great concept, but there's companies out there that are actually have swarms of people that are looking for best sales, looking for the best, looking for the ones that see themselves. Frustrating. Dude, we're versus. Dude, are you a loan officer? Are we about to throw down? We're new at this, man. I don't know. It says versus, so that's USC, dude. That's USC. Hold on. Who's winning? I don't know. It's so weird. So, all right. So, DSCR, you need a large down payment. All loans are based off of risk. Everything is risk. You have not enough money down payment, you're a high risk. If you have not a good income, you're a high risk. So if you're trying to get away with all of those things, the only thing that we heard him. Turn this on? I don't know. Turn that on? Yep. So that everybody's looking for investments, but with investments, you need money down. And it's not like, hey, I'll invest for free, and then if something goes south, well, no worries.
Wait, because that really is what happens. Oop, we lost our live guy, and we lost you, Chris. Yeah, turn us just a touch. There we go. Cool. All right, so engineer, what do we got?
Bought my house this year, hoping to refinance in 2 years.
Oh,
Cool.
We're
here for you.
You and everybody else that's getting in right now.
Call me.
Because we do compete with rates. We compete, and we have different ways of bringing rates down. The truth is, the rates are set by the market. And remember, your mortgage interest rates are based off the 10-year bond. So when Fed Powell is talking, Jerome Powell, Chairman of the Federal Reserve, when he's talking, it's something that we think about. It factors into the bigger economy, but it's not a direct reflection into your mortgage 10-year bond. Go ahead.
Who would you recommend to get a loan from?
Oh, that's a good question. He's pretty smart. So if I were he says me, but if you were gonna use me, the one person I would probably recommend is him.
Either that guy or that guy.
Yeah, one of those two, because here's something that I learned a while back. Somebody who's willing to put it out there. Somebody who's willing to say, hey, here's my phone number, here's my address, find me, email me. I really talk about the guidelines. I really understand. And I'm not always right, by the way. We check each other all the time because the guidelines, they shift a lot. So we put it out there. We give you an honest assessment of where you're at. And if the loan can be done, we can do it. Next question, engineer.
Okay. Can you guys hear us? There's some comments saying after the dude joined, the audio's been messed up.
Oh, shoot.
So,
How do
if you guys can hear us, comment.
Okay, so we need to, if somebody can hear us, if you can't hear us, oh shit, I don't know if I can do that anymore. Dude, I'm gonna go to jail. I'm going to jail
Again?
Oh, again.
Sounds good now.
Dude, okay, sounds good now. Thank you guys for participating. We're not pretending to be TikTok geniuses. We just understand loans and we want to help you get houses. We're going to give you the real situation of the market. It's not pretty. It's really not pretty. You might have people telling you that everything's great. It's not great. It's rough. It's rough. We're still here. We're still doing loans. We still want to help you. Go ahead, engineer. What do we got?
Do you guys finance as well?
Do we finance?
That's a great question. One that deserves an even better answer. Yes, that's what we do. We're in financing. We finance houses.
Yeah, we're loan officers. Yeah, we got our NMLS at the top and all over the place. And at the top on the link on our account, you can actually apply for a mortgage. And then we even got a way for if you don't make enough money to do a side hustle. We got everything. What's the next question? Engineer.
Try to join that one.
So somebody, no, they're gone quick. So that's kind of weird. The whole thing's.
I think they're accidentally hitting.
You think so?
Yeah,
Maybe
it's
it could
really
be
close to
accident.
the
There's
stream.
somebody else. But it did mess up the audio last time. So
Yeah, let's not do that.
okay. So we do want to talk with you guys. We're going to start doing this more often because the state of the economy, it's rough. And people are asking us, hey, is it a good time to buy? So is it a good time to buy? What do you think?
Yeah, absolutely. Here's the thing. So there's a lot of people that want to buy, but they're waiting until the rates go down, or they're waiting until the prices go down, or they're waiting until Jesus comes back. So there's all these.
I don't know if you can say that anymore.
I love Jesus,
Dude, but I don't think
I'm
you can say
waiting for
that.
him.
I don't know.
I'm waiting for
Dude,
him.
I don't know what you can say anymore.
So,
Anyway.
so with that, all that being said, get in. Just get in. Get your foot in the door, okay? Because if you're waiting for your dream home, it might be $100,000, $200,000 more. If you're waiting for your dream home, interest rates are still going up. So if you can get in, get in.
If you can get in. That's
Yeah,
the catch.
if you can.
That's because most people can't. Go ahead, engineer.
What would be the average payment without taxes?
On what price point? Does it give a price point?
It
If
was
not, we're
the
going to pick one.
85K income with the 630 credit.
85K,
And
630 credit,
340K house.
340K house, 340K house. Right now, what are you guessing the payment on that?
340 is about $3,200.
$3,200 a month. That's not a quote. It's not a guarantee for a loan. It's not an offer for a loan. Go ahead, engineer.
I currently want to buy in Horn Lake. I think it's Minnesota.
Okay,
no,
perfect.
Mississippi. I think.
Mississippi, okay.
I have a 732 credit score. I make 90K a year.
732 credit score. By the way, can you hear our engineer when she's talking? Probably better because she's closer to the mic, right? 732K, and how much? 90K a year?
90K a year.
Now, how much does 90K get you? No debt.
400.
So with no debt, 400,000. But I got to tell you something. When I get this happens a lot. I get a young guy who's like 21 years old and he just became a lineman and he makes $140,000 a year. And he's just, I'm looking at his income and I'm going, you're killing it. You're going to get whatever you want. And then I pull his credit and he's got a Raptor payment for $1,400. It's a very nice truck. An unbelievably nice truck. Can't buy a house no more. That's a pretty tough one. Go ahead. What do you got?
What number do I call? Looking to get a house soon.
Dude, check this out. Ready? This is a tough one. Go ahead.
909-841-3058.
909-841-3058. Yeah, we're all over the internet, and please call us. Let us know you saw us on the live. We'd like to know when TikTok is actually working because we get a lot of applications from TikTok, like a lot of them. Go ahead.
60K a year, 8,000 in debt. Been at my job for 5 years.
60K
I want to buy a house
a year.
soon, but I don't know where to start.
What do we got? 60K a year, no debt.
No debt?
Yeah.
8,000 in debt.
We'll go that first. So 60K a year, 245,000, right? So if you had no debt at all, nothing, zero, nothing, you could buy a $245,000 house. That's provided you have all of the other things going well for you, decent credit score, different, and all of these other things that have to happen. If you have debt, roughly 190. Now it depends on how much debt, because if you have not that much debt, it goes up. Go ahead, engineer.
Do you guys service in Florida?
Do we service in Florida? Service is a very tricky question in the mortgage business. Service is after you bought the house, who you pay your payment to. But do we do loans in Florida? Yes, we do. We love Florida. Love Florida. Go ahead.
What's the best route to start getting investment properties as of now?
I would say
Be rich.
Ooh.
Yeah.
Better than my answer.
If you be rich, if you just be rich and really wealthy, it's a very good time for you because people are walking in with cash offers and like buying up properties like crazy right now. There's some very big companies out there that just are coming in and buying up. So if you've got a lot of cash, that's the best move. The second best move is
marry rich.
see, that's why I keep him around, man. He's my business partner, just my business partner. He's
Call us. We need to see where you're at to figure out where you're going.
And we'll help you. Next question, engineer. Okay, so this was our experiment on live. How long have we been going? Oh, we got a question. Go ahead.
Yeah. Can I pull equity out of my home to put down, purchase a new home?
That person just snuck in.
Yeah, just right under the
Right
wire,
at the
man.
end.
Right, and we're gonna give him a good answer too, huh?
Yeah.
We're
So
gonna
the
give
answer
him-
is yes. It's a very common strategy. There's a ton of equity in houses right now. Millions of dollars across the nation that's accessible. Yes, you can take money out of this house to buy your next one.
Yeah, and by the way, there's people thinking there's going to be a housing crash. I got a different perspective on that, and it's not just mine. I look at a lot of people. Because there's so many people in 2%, 3%, and 4% interest rates, it costs them more to sell their house or walk away from the house and rent than to actually stay. Because of that, they're kind of landlocked. They're locked. They don't all the way want to be there, but they have to because renting is more expensive than owning their house, which means people aren't going to walk away. And the side note is most of these people have a lot of equity, $100,000, $200,000, $300,000 in equity. You don't just walk away from $200,000, $300,000 in equity because that's a lot of money. So housing crash, probably not so much correction. Yes, there's a big difference between a correction and a crash, but we're here to help you. How long have we been on? There's a timer going on. If you swipe up, you will see the timer, I think.
Or pull down.
Oh.
Hit the side button. All right, never mind.
I love
So
being
keep
an
talking,
expert.
Chris. Keep talking. No dead air.
Oh. Hi guys. So yeah, what he's saying is correct. There's a lot of equity in houses. There's a lot of money available. You can access it. Yes, you'll have to go through the income credit check, which we make it real easy and painless. So all you got to do is call us.
So we've been going for about 40 minutes now. We're going to start doing this more often. We're going to start doing it probably every day, 5 days a week during our work hours. We're not going to be like at home at midnight doing this kind of stuff. That's not our gig. But our goal is to educate you guys. We're going to try and teach you guys what's going on. We're also going to give you the reality of, hey, 60,000 will buy you this much. Side note, we've been hearing this for so long that we have invested in something to help people make money on a side hustle. So we're doing it ourselves. We literally have accounts that are doing it ourselves and doing the side hustle. We'll teach you step by step so you can have a side hustle. We know how to factor that in. Go ahead, engineer. We got one more question.
How can I purchase a home with an LLC instead of my personal name?
Beautiful. Chris?
So here's the thing. So buying a house and financing a house are different. So if you're just going to buy a house, you're just putting the house in the name of the title. If you're financing a house, an individual has to finance the property, not a corporation. Okay? An individual. And this is for residential real estate, not commercial, not buildings, not rentals. Residential real estate. So an individual has to do the financing, and once it's done, you can put the house into the name of the corporation.
That's
Yeah.
if you're going with your normal Fannie Mae, Freddie Mac, FHA, USDA, VA. If you're going with those. If you're going with private money, you can do LLC stuff, but that's not the area we live in. We can refer you out, but that's not the area. We work in the primary residence. We're trying to get you a house. It seems like there's a lot of stuff just popping up right now. Talk to me. What do we got on there? Nothing?
No,
You
just
see it, right?
that's people. Oh, that's people inviting you to join the live. It's spam.
Spamming us?
Spam?
Yeah.
Dude, this spam thing is crazy. How many people do we have listening?
Delicious.
We have 9 people.
You
We have 9
wasabi?
people?
You ever had
9
wasabi?
people? Wasabi? Oh, yeah.
Wasabi.
Someone said.
What's
Wasabi?
spam?
Someone said you
Alright.
got me sold. Call you shortly.
All right, cool. We're here for you. We're going to work really hard to get you that house, even in this rough environment. And then strategic refinance. Got to plug that in your brain because you don't want this 7.5% forever. We want to get rid of that thing, and we want to do it strategically. We're going to build it in from day one. Strategic refinance. Okay.
So if you guys want a house, call us.
Call
We'll
us.
get you started.
Okay. Anybody else there? No. Okay. So we're signing out now. We're going to do it again. We thank you guys for showing up. We hope we gave you value. Our phone numbers are there. We'll give them to you. I'm going to have a flip up card next time so we can just give you our phone number and you can see it. It's actually going to be backwards because I think it has to be backwards, right? In order for them to see it. All right. So thank you guys for participating. Have a great day, and we are out.
Bye, everybody. No, we're not.
All right. Well, in the meantime,
Psych.
let's-
It's like.